coming to you on where's the market going, what we are going to expect. Powell came out yesterday and talking about where he expects the economy to go and what the Fed Reserve to what they're going to be going. You can see it was mixed market. We have right off the bat it started going up and then it started dropping. To me, very interesting. The thing that I'm looking at is one, we see oil prices is still going up. They're still lacking up. That is one thing that I'm still watching. And then we have to go into Bitcoin. I'm not a big fan of watching it, but Bitcoin is still lacking. It's not moving. If Bitcoin starts moving up and oil prices start dropping, I would be more bearish or more bullish onto that, and thinking the market's going to start going back up. But we see at the last moment, the market, the S&P 500, is just sitting there, and it's very strong. Where's the sellers? Where is the sellers? Let's get in the chart here. This is the 5-minute candle. We have seen it. That was when Powell just started talking, and after that it started dropping, hitting that bottom. But let's zoom out. We are in a downtrend still. We can see the RSI is sitting there touching right at that touch peak, and it makes me wonder. I think that we're still in this downtrend. It's having a downtrend indication. It's just not showing to me we are moving in an upward trend, unless we are starting to see a different pattern. And this is the 4-hour chart here. We hit that resistance, and then now it's getting that support. It hit the support, so it's hitting resistance and support. I don't think we are going to go up. I'm a little bit more bearish. Let's look at another chart here. This is still the S&P 500. And a lot of people are talking about the head and shoulders. You have your shoulder, your head, and your shoulder right here. Now, this is where we got a buy signal right in here. And that was on, I think it was Tuesday, yeah. And then on Thursday, we got a sell, a strong sell. When was the last time we got a strong sell? Well, that was about a couple weeks ago on that pit. So you can see strong sell had a very impact on it. Let's zoom out to a daily candle. This is where I'm getting a little bit more information, because we didn't really see where the market's going to go. We didn't see where the market's going to head to. But I think we can see it on a daily candle a little bit more, and we can spot it out a little bit more. Let's zoom in here. Okay, so we had a buy signal, and we had a sell signal right up here at this top peak. So the sell signal, that was last Friday. Last Friday was a sell signal. Well, when was the sell signal ever? I still don't like the chart. The chart's not looking very good. We're going to zoom out a little bit more, or spread it out a little bit more. And because this chart is just not making me, I thought it was the daily. No, it's the 1 minute daily. That's the reason why I'm not getting. Okay. That's the reason why it's not looking so making sense. here is the daily candle, not the minute. I don't know why it went to the minute when I'm clicking on the daily on the bottom there. But, okay, we have a sell signal, and that was Thursday. Thursday was a sell signal. And this is where I think it's quite interesting, is the last time we had a sell signal was in February. February this year was when we had a sell signal. It was not much, it was just a pull back, and then we had a strong buy signal. And that strong buy signal was this rally. Well, that to me is questionable. If we have a sell signal, is the market still going to follow suit? So still keep on going down? I'm getting out of it the daily channel and the 4-hour. It looks like we are on a downtrend still. The Powell, I know a lot of people are very, they think that we're going to have a soft landing. I don't see how a soft landing is going to occur. The soft landing is not a very promising. It doesn't make sense on a soft landing. So what I'm looking at is still a downtrend, a pullback. Now, is this pullback could it go down a little bit more? Yeah, it could go down a little bit more, but we are in, the money flow is in a buy signal. So we could see buyers starting to step up, and like we are seeing, buyers are stepping up. But we are in a clearly down trend on the 4-hour. We are still in a sell signal on the daily chart. We are in a sell signal on the 4-hour chart. So I am still moving as a bear. I'm still putting as a bear. I'm still watching my portfolio and hedging my portfolio. And what I got is I got a new system now. I've been doing a new way of risk management. And I love the software. I paid for it. You don't have to. They got a free version. I recommend doing the free version. It's awesome. I like the paid version because the paid version, you can basically keep track of what your trades are, and you can keep track of your risk management too. So these are the things that I have done. So this might not make sense to you, but I'm just doing these trades. Now these risk managements, this is when it's going to expire. I have done it is a call broken wing. So these broken wings are one of the trades I'm doing. And I'm seeing a risk management. I have a chance of a 90% chance or 95% chance that I will be in a profit on this trade. That said, could this change? Yes, it changes every single day. It changes daily. I'm always watching it, making sure I'm hedging my portfolio, making sure I will get a $186 for this trade. I get credit on it. So what happens, and I like this software, it's really nice. You gotta. What happens if the trade does go south and it starts going up? Say for instance it starts heading upwards here. I still can make additional money onto this trade as a $600. So sort of like a bonus on it. So if it does go up, I can still make that money. I can still make a little bit extra money on this trade. And if it goes down south, well, I already got the credit. And the way I'm trading now is different from the way I traded before. I did a lot of risky moves. What I'm doing now is I'm hedging my risk. I'm making sure my risk uh, is is hedged, and I'm not losing a lot on my risk. The maximum loss it gives you right there. So if you do lose everything, you can lose a $1,800. So yeah, that's a really it is a risk on that. This one right here, I was almost going to cut my losses, and this is the one right here. I have this one. I was going to cut my losses. I was in a negative. You can see I'm at an 80% chance of profit. Well, 80% chance of profit, I will get the maximum profit is going to be $700. Maximum profit $700 too. I could risk lose a maximum of $2,000. Well, we gotta zoom out here. Before like Wednesday, this trade was right up into here. And I'm thinking, well, I want to see what Powell is going to say. I don't want to put any, I already have risk onto it. And if it goes sideways, I still make money. If it starts booming, I will lose this profit. What this trade, if you zoom out even more, you can see I have a profitability. If it goes all the way, if the stock market just crashes, I have a probability of $200 I could still take. And if the market does starting to hedge up, starting to go up, I will start trying to cut my losses. And what I've been doing, if I have that scenario happen, I will try to cut my losses by selling my calls and then keeping my puts. And then so I hedged off my loss, but I will try to keep my puts and I'll have those in the background. Why would I do that? Well, I would keep a little bit of the premium on these because I still have a little bit of money I can make off of it. But with this money, I would probably lose a lot more if it kept on going down. So these are times when you want to risk manage your portfolio, and I would say risking managing your portfolio is a great opportunity. I have figuring out, and if you keep on following me, yeah, like and subscribe, I will keep on trying to show you how to slowly move your portfolio into a good, not risky. I'm having my portfolio moving a little bit higher on these risk and management trades. Another one I have done in the past, and these are great opportunities right in here. You can sit there and look at some of these ideas on calls. Iron conduits are great, but what you want to do as well, and this is the ones that let's go in here. I don't want to change any of my portfolios, so I'm going to. I have been doing a TTT or a TQQ and selling puts out to the market. And why I would do that is because I can hedge my portfolio. This is sort of like they would call this a wheel option. So you can see I'm getting a credit here. Well, what I've been doing is taking that and buying and hedging my portfolio and getting a credit. Sorry, you can see I was getting a debit, and now I'm getting a credit. The way this trade is right here, I would have a 90% chance of making profit. as of right now, if the market keeps on going down lower, I might be starting to sell this out to the market. But the reason why I wouldn't do this right now is if it gets lower and lower, I could try to sell these premiums, these for higher credit, so I make more money. Now, the other thing is, because I'm using and mentally training myself, you have to mentally train yourself. I know it sounds really funny. You mentally train yourself to put yourself into this mindset that you are going to buy this for 100 shares, and you're going to buy it for $32. You have to mentally train yourself. If this goes south, you're going to buy it for the $32 strike price. And now you're saying, well, why would you do buying a call or buying a put on top of this? You're hedging. You're hedging your portfolio. So the way I'm looking at this, and you can make a lot more if you just basically you don't have your hedge. So, but you can see with you not hedging, you have now a maximum loss of 3,200. It should be really 3,200, but they are deducting your credit from your maximum loss. And that's the reason why they're saying your maximum loss is 3,137. So that's your maximum loss. But if you hedge it, basically adding a put back to this, your maximum loss is now 175. What you would want to do, and this is what I've been doing, if it starts getting into the money and you have to start buying these shares, that's totally fine. You just sell your puts that you made money off of. And you sell those puts that you made money off of, and then you basically are having money. You hedged your account. You just hedged it. And then you can basically afford to buy a little bit more. You have a little bit more cash coming in. You could make a higher premium if you want to take that risk. But I don't like that. Plus, with their you're going to have to take a margin of $200. When you take this other risk, they're going to take a margin of $320. I don't know why they would take a margin of $320. Realistically, your broker is going to probably be like holding back $3,000 just to make sure you have the capital and you have that trade. So yeah, that is, you have a 91% higher chance to making money. These are things that I would recommend going after. These are great trades. These are great portfolios that when you start selling options out to the market, they are riskier on one way, but you have to hedge your portfolio by what was just explained to you, buying a put out there. Now, say for instance, I bought a put into the money right here. This would be in the money right here. Look at the chances of me getting a profitability. I have a chance of 44%. My chances of making profit is lower just for me buying options. But for me, basically selling an option out to the market, I have more profitability chances. I have a higher chance of profitability. These are things that keep on watching. I'll keep on trying to explain. These are stuff that I have been learning in the market, and you can constantly have revenue coming into your portfolio, constantly having money coming in there. It's not all glamorous. There is a lot of risk. Like again, I just explained. I'm just showing you what my portfolio was. This iron conduit one, I was totally red. I was losing. I was up to $1,000 of loss onto this on Wednesday. It was just the way it was. Now, if my trade comes into 80%, what the computer's saying, I will get a credit. I will keep all that $700. And that's what I'm sort of hoping for. I'm sort of hoping for this to expire worthless. And if it expires worthless, I keep everything. And that's the name of the game. Now, what we're seeing right now, that's the reason why I'm hedging on the lower end. If it starts going the direct opposite, well, you can see I just showed you. It's starting. It would be if it starts crashing, I made $200. Well, if it starts hedging and starts showing the market starting to go upwards, I would hedge in the upper end. I would make a little bit more on the upper end. But I'm seeing a sell signal. I'm still going to hedge on the lower end until I see different wise. And so definitely basically look at your risk analysis and look at what you are willing to risk and you feel comfortable, because this trade was going south in a quick hurry, and this trade could go south in a quick hurry on Monday. I don't know, but if it starts dropping down lower, I will be feeling more confident that this trade's going to be a profitable trade. Now, these other ones that I do is a broken wing. I'm thinking about if it starts trading an upper, we see the stock market going up. Well, I'll do the direct opposite. And what I'm going to do, this is what we're going to do. We're going to come over here. I'll show you. I know this is going to be a long video, but the direct opposite, we're going to be putting puts in there. I'll show you in a different video on how to put puts in there. But that said, I think the market looks like it could go south still. Are we seeing sellers? No, we're not seeing sellers. We're not seeing people buying puts. We're not seeing any of this stuff. We're seeing the market just dwindling. They are waiting for more data, and that's next week, and that'll be Thursday. I think the market's going to be choppy, going back and forth, and that's why I'm looking at the market. The market's just going to be choppy up and down, until it finds what it's going to see on Thursday. And the other thing, let's go into the dollar. We are seeing the dollar, before I forget, the dollar is getting stronger. The dollar is in this buy zone and it's getting stronger. I think it's going to break up even higher. This is not good. If the dollar goes up higher, we're going to see a lot more pain in the market. We see oil prices going up. We see the dollar going up. And we are still in that reverse yield into the bonds. The bonds are still, the yields are going up. This is, to me, that's the reason why I'm still bearish. I see these signals, and I'm saying I'm not going to risk on the upper side. I'm risking on the lower side right now. So that said, I appreciate your time. Definitely subscribe, like, and if you want to learn more, definitely comment more on risk management onto your trades. I have been learning, and I'm still learning, and I appreciate your time.